So welcome everyone, wherever you are, to the Peterson Institute today for this virtual event. The work that's going to be presented today gives a preliminary, since we're not that far out from the pandemic, but a very rigorous answers to questions that are crucial not only for the future of our economies and the legacy of the COVID impact on them, but also for quality of life and innovation. So we're talking about the effects of increased digitization during advanced economies during the pandemic and its impact. The fact that we can put on a virtual event like this today from Zoom is a testament to the enduring opportunities that increased digitization has given us across sectors, countries, and firms. And the report that's going to be presented has insight not only to the impact during the pandemic, but whether these changes will last in terms of structural changes to the economy, labor demand and supply for different kinds of workers, and productivity. I myself, as many of you have probably seen many charts on e-commerce, for example, returning to trend, post-pandemic, maybe something that disappointed many people who hoped for more accelerated digitization, and also increased demands from some employers to come back in person. But this report really disaggregates to point out where there are specific changes that are likely to endure. And one of the facts I found most fascinating in it is that the rate of work from home is now 3 times what in Europe, what it was compared to pre-pandemic. It also has recommendations on how to maintain the potential benefits and reduce the pitfalls. So interesting topic is one thing, but we also have the right people to illuminate it. We will start with the presentation from the lead author of the IMF presentation, Florence Jaumotte, who is the Deputy Division Chief of the Multilateral Surveillance Division of the International Monetary Fund's eminent research department. She has decades of great work on relevant topics like open economy, macroeconomy, growth, inequality, and labor markets, and she has a PhD in economics from Harvard. Then we have 2 excellent discussants. We know one of the most important shifts towards digital payment was towards digital payments due to the rise of no-contact transactions during the pandemic. Barbara Kotschwar, who is also, by the way, a PIIE alum, we're excited to say, is on the front lines of digitization in the private sector as Executive Director of Visa's Economic Empowerment Initiative, which focuses on digital equity and inclusion and the future of money, among other things. She's also a professor at Georgetown focused on political economy of Latin America, and she has a PhD from Johns Hopkins SAIS. Then we'll have also, as another discussant, Anton Korinek, an expert on artificial intelligence as professor in both the School of Economics and the Darden School of Business at the University of Virginia. He's also a David M. Rubenstein Fellow at Brookings across the street from PIIE. He's widely published in top journals like the AER in both AI issues and macrofinance issues, which is quite an achievement. He's also the lead economist for the Center for Governance on AI and a lot more. So as you can tell, we have a great, interesting subject today, great panelists and presenter to discuss it. And with that, I'll hand it off to you, Florence.
Thank you very much, Martin, for the kind introduction. And thank you to the Peterson Institute for hosting us today. We will present our new staff discussion note, Digitalization during the COVID-19 crisis, implication for productivity and labor market in advanced economies. As you can see on this first slide, this is joint work with a large team of economists in the research department of the IMF. At the onset of the COVID-19 pandemic, policymakers and academics alike expected that the pandemic and subsequent containment policies would accelerate digitalization with potentially important consequences for labor markets and productivity. 2 years now after the pandemic, 2 emerging puzzles have challenged some of the priors. On the one hand, on average, in advanced economies, aggregate labor productivity rose following a common counter-cyclical pattern in recessions. Still, for many sectors, labor productivity experienced a substantial decline and has yet to realign with pre-COVID-19 trends, as you can see in the black line in the left panel. This stands in contrast with expectations of an acceleration in productivity in the wake of pandemic-related IT investments. On the other hand, there were concerns that increased digitalization could displace middle and low-skilled workers, driving more inequality in the labor markets. However, advanced economies labor markets have tightened more for low-skilled jobs than for higher-skilled ones, as shown in another recent IMF staff discussion note. Against this background, some of the key questions that we consider in the note are: what was the state of digitalization before the pandemic, and how was it impacted by the crisis? What has been the impact of digitalization on productivity and its impact on labor markets? A word of caution, as Martin said, with only 2 years of data available at the time of writing of the analysis, some of the, the permanence of some of the results has to be taken with caution at this stage. Let's now first discuss the evolution of digitalization. The measure of digitalization we use in this report is the share of workers using a computer with internet access, as this was the measure with the broadest and most granular coverage. According to this measure, digitalization in the workplace has increased during the pandemic, particularly in countries that were less digitalized. In the average country, the share of workers using a computer with internet access rose above the pre-COVID trend in 2020 and remained above the level predicted by the trend in 2021, as you can see in the left figure. In general, this increase was smaller for what we call frontier countries, i.e. those that had already high digitalization levels before the crisis, and it was markedly more pronounced for non-frontier countries, as you can see in the right figures. So there was a partial catching up of the later group and a narrowing of the digitalization gap among advanced economies. The acceleration in digitalization was also heterogeneous across firm sizes and sectors. Small firms, those that had less than 50 employees and which had lower levels of digitalization pre-COVID, experienced higher increases in digitalization than medium and large firms. And a similar picture emerges from the sectoral variation. Some of the sectors experiencing the largest rises were those with the low initial levels of digitalization, such as food and accommodation, construction, transportation, and storage. We now turn to discuss the effect of digitalization on labor productivity and total factor productivity. First, we looked at how labor productivity fluctuations at the sector level were associated to sectors' digitalization during COVID-19. So for this analysis, we draw on digitalization differences across countries for given sectors. And the results show that higher digitalization in a sector mitigated labor productivity losses from the COVID shock in 2020, and that this effect was stronger in non-contact intensive sectors. The contraction in productivity was 1/3 to 1/2 smaller than that of the same sector, but at a lower digitalization levels. Second, we used a sample of publicly listed firms for which TFP, total factor productivity data, are available, and looked at how the TFP performance was associated to the firm's digitalization. Firms that were ex ante more digitalized left the crisis somewhat faster than less digitalized firms, both in the US and in advanced Europe. Now, the TFP results provide stronger evidence of lasting benefits from digitalization than the analysis based on sectoral labor productivity, at least so far. This could reflect either that TFP is a better measure of productivity, while labor productivity changes are driven by additional factors beyond TFP, such as changes in the level and composition of employment. It could also reflect that publicly listed firms are a subset of all firms that are larger and may be better able to leverage their investments in digitalization due to economies of scales and network effects. Next, we turn to impacts on labor market. We did a similar analysis as the one on productivity at the sector level, but for fluctuations in hours worked. We found that higher levels of digital intensity in a sector reduced losses in hours worked at the pandemic peak by 85 to 40%, when we compare a high level of digitalization relative to a low digitalization for a given sector. The effect was stronger in non-contact intensive sectors. If we make the assumptions that for countries with below median digitalization, the digitalization levels in each sector are increased to the 75th percentile of what we can observe for a given sector, the average contraction in hours worked for the entire economy would have been 3 percentage points smaller, approximately 1/3 of the historical fall in 2020. So the impact at the level of the entire economy can be quite substantial. Next, we did some more granular analysis distinguishing employment between digital and non-digital occupations and using regional variation in exposure to the COVID-19 shock, both for the US and the UK. And this allowed us to examine the impact of the pandemic on the composition of employment and labor demand. Overall, the analysis shows that the increase in the employment share of digital occupations during the pandemic mostly came from a larger contraction of non-digital occupations. Hence, the digital occupations were better shielded from the contraction in economic activity during the pandemic, but there was no obvious shift toward an increase in digital jobs per se. The evidence is a bit different for the UK, although we do not show it here, where we saw a clearer shift toward digital occupation and away from non-digital occupation in response to exposure to COVID. Using regional data on vacancies, which are a better indicator of labor demand, we also find for the US and the UK that the rise in the share of digital occupations in the more COVID-exposed regions was temporary, as you can see in the right chart. And there is little evidence so far of a structural shift in the composition of labor demand. This suggests that the increase in digitalization was probably concentrated in primary digitalization forms that allowed businesses to perform activities without in-person interactions, but rather than fundamentally overhauling their production process. Now, a trend that appears to be more persistent is the change in working from home, and a trend which is shared by most advanced economies. The share of workers who usually work from home rose substantially in 2020 when pandemic-related restrictions forced firms to operate in remote settings. However, they rose even further in 2021 as by the end of the year, containment measures were being lifted. This change may have implications for aggregate labor supply, as working from home may increase the labor market attachment of workers by reducing their commuting time, improving their time management flexibility, and giving them greater personal autonomy. At the cross-country level, we show in the middle chart that suggesting evidence that countries where a larger share of workers work from home also had a better performance on labor force participation rates relative to pre-COVID trends by the end of 2021. On the right chart, we looked at microdata surveys on workers' labor decisions. And this suggests that there may be a shift in the way individuals take advantage of the option to work from home and the implications this behavioral change may have on aggregate labor supply. In the UK, which is the country for which data is shown on the right, transition rates into inactivity were traditionally higher for women working from home than for on-site workers before the pandemic. But the rates of movement into inactivity have been converging to those of on-site workers by 2022. In the US, transition into inactivity was already lower for workers working from home than for on-site workers before the pandemic, and it has remained the case during the pandemic. Let me now sum up the main findings of our analysis and offer a few policy recommendations. So as I've discussed, we've seen that the pandemic triggered an increase in digitalization, especially in less digitalized entities, whether they were countries, sectors, or firms. Digitalization shielded labor productivity and hours worked during the pandemic, and especially shielded workers in digital occupations. Now, while it is still early to tell what the long-term consequences for productivity and labor markets will be, the evidence that we have so far pointed to the following conclusions. There could be possible gains in total factor productivity in the longer term. I say possible because on the one hand, some of the evidence suggests that the digitalization that took place is probably in more basic forms of digitalization. And second, because for smaller firms to benefit from this investment in IT, it is important to maintain healthy competition in digital markets. Second, as far as the evidence we have so far, we do not see any structural shift in the composition of labor demand. If anything, the vacancies for low-skilled jobs have picked up much more strongly than for high-skilled jobs. Third, a more persistent trend is the increase in work from home, which could increase workers' welfare and labor market attachment with possible positive effects on labor supply in the longer term, especially for workers that are traditionally less attached to the labor market or who may think to retire early. Now, despite this progress, there are still large differences in digitalization across countries. And as you can see in the right chart, these are in part related to the cost of digital services and differences in this cost across countries. Now, government policies can support a more digitalized economy and especially ensure that gains are broadly shared across all participants in the economy by investing in digital infrastructure, fomenting competition in digital markets, and equipping workers with the skills needed for a digital economy. Last but not least, labor laws and regulation must adapt to changing working environments to facilitate fair telework and make sure it is available to workers wherever feasible. This concludes my presentation, and I hand it back to Martin. Thank you for your attention.
Thank you, Florence. That was excellent and very concise as well. So we'll have plenty of time for the discussion. Next, we'll go to Barbara. I'm going to share her slides. And off to you.
Great. Thank you so much, Martin, for sharing my slides. And thanks so much for Peterson Institute for inviting me to this very interesting presentation and allowing me to read the study and listen to this and share in this discussion. It's always nice to be home, even if it's your virtual home, and to have the opportunity to talk about such relevant and timely events. I also wanted to congratulate Florence and the whole IMF team and the IMF for commissioning this important study. I think that you've touched upon some of the issues that we're all thinking about as we emerge from the pandemic. And we know that the pandemic ushered in this acceleration of digitization. My former CEO used to talk about half a decade's worth of digital progress being compressed into several months. Which of course has, as you point out, some benefits, but there are also some questions, and there are questions about equity, there are questions about sustainability that the report raises, and that I think many of us will be spending quite a bit of time thinking about. We also looked at some similar questions, and Martin, if we could go to the first slide. And I realized that your report is mostly on advanced industrial countries, but I think that many of the trends that you're looking at can be translated across the world. And that, of course, brings up some additional questions, which we can talk about during the Q&A period. But we also looked at this, and we looked at it from the perspective of Visa. We're a payments company, and so we're very interested in people's ability to pay and be paid, and then to also do something with that payments capacity. And so we looked at a number of factors that we think go into digital infrastructure and put them together with the help of our friends at Euromonitor into an index, and then plotted that against e-commerce. And what we found was, not surprisingly, that there's a very strong relationship between robust digital infrastructure and the rise in e-commerce. I think this obviously is intuitive, and it also mirrors some of what you found. But we also thought that the interesting story is what we found in the next slide. And that is that even in countries in which digital infrastructure is weaker, consumers and merchants were largely able to make the shifts to online buying and selling. And in some cases, this rapid adoption was associated with workarounds, with different innovations in the digital space, in payments and in other formats that allowed folks to go online relatively quickly. In some cases, there were concerted policies that governments adopted to accelerate this type of digitalization. Your colleagues at the IMF have done a remarkable job of cataloging these government responses to the pandemic. And so if we have time in the question period, I'll probably ask about whether the research department is planning to take a deeper dive into the impact of these policies on the sustainability of digitalization. I mean, you point out that we have very limited years of data, and so we don't know how much of this will hold, how sticky these results are. Another question could be, how could we make the results that we think are beneficial to society and to the economy be stickier? And so I would welcome some more discussion and thinking about that. As we think about what can drive this sort of sustainability and what can help the positive effects continue, we think about what are the components of digital inclusion. The McKinsey Global Institute, I think last year, estimated that universal access to digital finance, something that we at Visa think about quite a bit, for developing countries, and just increasing that access for developing countries could boost global GDP by over $3 trillion. I think we can all agree that the global economy could use a boost these days. And so enhancing access to digital and to digital financial access could be a policy consideration. Now, we tend to think of it as a recipe of success for this outcome as comprised of three main ingredients, if I may. The first is opportunity, which we include the hard infrastructure, but also soft elements such as policies that allow an open flow of data across borders, that allow folks to be able to sell their goods through the internet to other countries. The second element, which is elaborated in your report, in some of your recommendations, is digital skills. And I call out that the report actually calls upon governments to invest not just in digital capital, but also in human capital, and making that human capital appropriate to the digital needs of today's workforce. And then finally, we spend some time, actually at Visa, we spend a lot of time thinking about trust. And as the digital ecosystem is developed, it's important to understand that even access to world-class technology in the infrastructure space won't work optimally if those who use it don't trust that they're safe when doing so. So, these three elements need to be taken into account. Now, I was very happy, Florence, that you spoke quite a bit about small businesses. And I think that when we talk about digitization and access to digital technology, often we're thinking about larger companies. And it's important to realize the importance of digitization and digital access and international digital access for small firms. And I think that one of the messages that comes through kind of between the lines in the report is the worry about those who might be left behind, but also the opportunity for bringing those who traditionally have been left behind into, closer to the forefront. This is something that we have been thinking about a lot. I wanted to pull together some of the data that we've collected over the years on a subset of these small businesses, small women-led firms across the globe. And as I suspect everybody in the audience knows, women-led firms tend to face greater challenges traditionally than male-led firms. Now, we've seen across the world that during the pandemic, there was a huge increase in small firm creation as people moved from COVID-affected jobs or shifted to entrepreneurship due to their own circumstances. The Peterson Institute has done some tremendous research on this. Simeon Jankov and his co-authors have looked at various parts of the world, at the trends on startups. Our research, which I have to say is joined by the same caveats of shortness of time, but also by the fact that it was conducted online. So there's an inherent bias in our survey. So I just want to recognize that. But we did find some interesting characteristics of these small businesses that were created during the pandemic. The first is that we saw a greater increase in women-led firms than in men-led firms, for reasons that I think both of the institutions on this call have been speaking about quite a bit. Second, the women-led firms are just about as digitized as the men-led firms. And third, we found that they're exporting more. So as a former trade economist, this, of course, is of great interest to me, but also in terms of all of the opportunities that we know exporting brings to firms and to the economies in which they're operating, and the multiplier effects that empowering female entrepreneurs and businesses can bring to society. So I think there's another scope of research should the IMF or Peterson wish to pick up on that. As you see in this slide from our limited research, we saw that within the population of women-led firms, success was quite strongly related to the ability to use digital payments and digital platforms, but also the ability to sell to other markets. And so I think that a number of policy recommendations can flow out of this. One being, when we're thinking about who benefits from digital trade, think not only about larger companies and sort of broadly defined innovation, but think about these small firms that were started up during the pandemic and that are seeing interesting results. In order for them to be able to continue to grow, they need to be able to continue to access other markets and be competitive. How am I doing on time, Martin? Do I have time for this additional slide? Excellent. So if you'll allow me, I have another additional observation, and this isn't directly related to the labor market. It is related to labor market participants and how they behave. So I think it's relevant, and I think it's actually quite interesting. And that is another observation on the importance of digitization goes into the realm of remittances and the effect of digital and digitalization on remittances. We know that remittances is not only a lifeline for immigrant populations, but an economic lifeline for many developing countries. And both of you have done quite a bit of research on this. Our research is continuing to show that digitizing remittances and allowing the remittance to have access to price comparison is helping to bring down the costs of sending and receiving remittances, and particularly in the case where remittances are both sent and received digitally, and remitters are able to compare the price of those digital remittances. We're seeing the cost of remittances to go down to close to the SDG target of about 3%. In our paper, you can see that there's still a lot of room for improvement, across the world to reach that level of digital remittances. So I thought I'd throw that out there as kind of a, complementary set of policies that we could think about. So I think the IMF has given us a tremendous gift in this paper and in helping us to think about how to enhance the possibility of maintaining these positive trends in digitalization. I think they're also right in asking us to think about the possible negative effects or the possible backsliding that might occur in this trend. And so I'd like to return that gift, Florence, by suggesting a research agenda that can support a number of policy goals. And some of this is aimed at you and your team, and you did such a wonderful job with this paper that I would love to see what you do on some of these other questions. But I'm also looking at you, Martin, and your colleagues who also do tremendous work. And Anton, I think you are perfectly positioned for some of this as well. So on digital infrastructure, a kind of obvious policy recommendation is, if you have gaps there, to focus on digital infrastructure. I think that it's important to think about exactly what digital infrastructure is the most important and what are some ways that countries have found of helping to bolster that. I think this report really goes a long way to answering the question of whether this is important and how is it important. And so I'd love to see a more granular look at this. The second is digital skills. Now, there still exists a skills gap. The report makes it clear and also makes it clear why that's important when we're thinking about the workforce. There still also exists a gender skills gap. And even though we're seeing that small women-led firms are about as digitalized as men-led firms, is that a trend that we can count on? Will this generation of small firms move towards eliminating the digital gender gap? Or are there support programs that need to be made? And I think that more research is needed on what the impact of this gap is, this gender digital skills gap is on workforce outcomes, including on small business success. Now, my third recommendation sounds very easy: to aim for an open, interoperable digital ecosystem built on resilience and security. But I think that given the trends that we're seeing in the global economy, we might anticipate seeing increasing what we kind of call digital protectionism. I think it's important to really look at what impact that could have on some of these smaller actors, on the poorer countries, and also on small, in our case, we're looking a lot at small women-led businesses, but all small businesses. And if the access to additional markets is cut off unintentionally, usually as a result of policies that aim to protect data, what could that mean to these societies and to the world economy? I know the Peterson Institute likes to look at the world economy. Interoperability, also being able to have different solutions in markets, is something that we think about a lot. And then the streamlining the compliance environment to reduce cross-border frictions. Really, we looked at that in terms of the remittances work, but also in terms of having small firms being able to take advantage of the global value systems, the global digital value systems that exist. I suspect that I am running out my time now, so I really appreciate the opportunity to comment on this paper. I look forward to Anton's presentation and of course, have some questions for the Q&A session. Thank you so much.
Thank you so much, Barbara, for adding that complementary perspective. E-commerce and payments and some of the decreases in frictions that come, adds a useful perspective to the more labor market macro productivity perspective in the presentation. I want to remind everybody on the call that you can add your questions in the Q&A. Once Anton's finished, we'll probably give Florence a moment to respond to the discussion, but then we'll be ready for your questions. So please send anything you're interested in hearing more about or getting clarification on. And with that, I'll pass it to Anton.
Thank you so much, Martin. And yes, we are all benefiting from this digitalization caused by the COVID-19 pandemic because it is enabling us to have this wonderful discussion online together. So thank you for the opportunity to comment on this really interesting paper. I thought I will start with a quick summary of my main takeaways. Then, as a discussant, I thought it is my job to ask two difficult questions. And then I want to focus a little bit on the road ahead, what this digitalization may be leading to in the years that are coming still. So as the paper observed, COVID-19 really acted as a catalyst for the adoption of digital technologies. And in some ways, a quick summary of the paper is it tells us what we can learn from this natural experiment. The paper carefully documents the effects of COVID-19 on the digitalization of occupations, jobs, companies, countries. One of the most interesting findings in this context was that it found that the gap between more and less digitized advanced countries really declined. And then it considers the resulting productivity effects. I will ask one of my questions on that topic. And finally, what I also found really interesting is how the paper identifies the structural effects of this trend for labor markets. So it found there was no permanent shift in labor demand towards more digitized occupations, but there are some indications of permanent supply side effects, the increasing trend to work at home, and also the continuing decline in male labor market participation. So let me ask one question about the framing. So digitalization is kind of represented as this silver lining of COVID-19. Of course, the underlying hypothesis, which has a very long history, is that digitalization is desirable because of its positive efficiency and distributive effects. But the question I want to ask, if it is so desirable, why did businesses need a pandemic to do what is good for them anyways? So in other words, how do we square this framing with the traditional invisible hand argument? If digitization is so positive, companies should have done much more of it anyways. Now, of course, practically speaking, there is a whole range of externalities from individual companies digitizing, and probably also internalities, actors that did not quite pursue what was in their best interest before the pandemic. But the reason I'm posing the question is because I think it's useful to spell that part out a little bit more fully, because identifying these reasons why we needed a pandemic to give us a push of digitalization is really instructive to better understand what the hurdles are that industrial policy and other structural policies can overcome to help us increase productivity via things like digitization, but also other technology choices and other forms of technology adoption. So I think this is a really rich topic to discuss because it has such broad lessons for industrial policy more generally, even now that COVID is fortunately largely behind us. My second question is about productivity. So we know at a very simplified level, productivity is simply a measurement of the ratio of production outputs over factor inputs. And if we talk about labor productivity, that would be the inputs of labor. Total factor productivity is a little bit more complicated, but the same idea. Now, what I wanted to highlight, and the paper has discussed that to some extent, but during the COVID pandemic, there were lots and lots of effects on both the numerator and the denominator of this fraction. There was, for example, a lot of labor hoarding, labor that counted as employed, but wasn't really employed, that kind of blew up the denominator. There were these really stark demand fluctuations that were reflected in the numerator. And all this makes kind of the shorter term movements and fluctuations in productivity very difficult to actually interpret. So when we think of where productivity measurements originally came from, they came from growth theory. And the perspective there was that productivity measures are the most useful when markets are in some sort of equilibrium, and then they allow us to essentially measure the long-run productive potential of an economy. When there's lots and lots of jumps in numerators and denominators, and lots of unemployed resources and lots of underemployed but officially counted labor and so on, then that makes it really hard to interpret what exactly is going on in productivity. So I think what the paper showed us, that was a really helpful first step to kind of visualize productivity effects of the pandemic. But we have yet to see what the long-run productivity effects of the COVID-19 pandemic are. And I very much look forward to future work on that. Clearly, we will have to wait for a few more years to see how all of this is going to be reflected. Now, let me focus a little bit on the road ahead in the last part of my presentation. So in some sense, our main concern of the 2000s, 2010s in this kind of area, and I want to kind of dub that period the beginning of the digital age. Our main concern was that workers who are non-digitized, who are lesser educated, may be just left behind by all these technological advances. And in some ways, the paper encouragingly finds that we didn't have to worry about that too much. And in fact, I think by now we can say the opposite happened during the recovery from COVID-19. Physical jobs like frontline jobs, jobs of lesser educated workers actually benefited much more from the pandemic than the cognitive jobs, the highly digitized jobs that would reap the greatest gains from this trend of digitization. Now we are in 2023 and COVID is largely behind us, but we suddenly have a new concern for labor markets. And that new concern arises because we have really entered the age of generative AI. Now it suddenly seems that not the lesser educated manual workers, But in fact, the cognitive workers are suddenly at the greatest risk of automation. So the new meme is ChatGPT is taking my job for cognitive workers. And we no longer have to worry, or at least temporarily, we're not worried as much about the robots taking the jobs of manual workers. So I want to show a couple more slides to just substantiate that observation. This is a graph that many of you may have seen over the past week when GPT-4, the latest large language model from OpenAI, came out last week. And I realize you probably cannot read the labels on these graphs, but what it essentially shows us in these green bars is that the latest version of GPT-4, essentially aces a lot of the standardized tests that cognitive workers have to take in the course of their career. So it has become really good at things like the LSAT test, the GRE, and so on and so forth. So I think now the big concern is that digitalization may actually be a stepping stone for automation of cognitive workers. And the way that would work is as follows. Let's say we take a traditional job and we transform that into a work-at-home job during the pandemic, where everything can be done virtually and people didn't need to go into the office anymore. Once the job is kind of confined to something that can be done digitally, it also becomes much easier to automate it via cognitive automation. And this new kind of type of AI systems, which is really good at cognitive automation, may actually be accelerated by the digitalization that we have seen during the pandemic. And just to substantiate it a little bit more, I wanted to refer to a recent working paper of mine where I have analyzed all the different tasks that generative AI can perform for cognitive workers such as myself as an economist. And I grouped them into 6 categories that I have listed here. It can engage in ideation, in writing, background research, coding, data analysis, and there is a total of 25 tasks, and there are probably many more that I have not listed. And these systems have really become quite impressive at many of those tasks. So that means this digitization may actually have accelerated the automation of cognitive workers quite significantly. And of course, we are not, where these systems are right now is not where they're always going to be. But in fact, we are seeing that there's really this rapid progress in the capabilities of AI systems. And so we can expect that these advances are going to continue over the next years. What the graph here shows is that the amount of computing power or compute employed by the cutting edge AI models has been doubling every 6 months. So it means it's quadrupling every 4 years, going up by a factor of 1,000 every 5 years. And we can probably anticipate quite a lot of cognitive automation resulting from that in the coming years. So thank you again for the opportunity to discuss this really interesting paper. And I really look forward to seeing what the longer term effects of this digitization that was accelerated by COVID-19 is going to be, both for the workers that we used to worry about and going forward for the cognitive workers that now seem at the forefront of automation. Thank you.
Thank you so much for that, Anton. I think that's really helpful to extend the analysis that was done in the paper of the impact of the pandemic up until now with a very interesting, thought-provoking look at what may be the next even scarier shock in some ways to labor markets. So our audience, Please add your questions in the Q&A, but first I'd like to give Florence a chance to respond because she has been pestered now with multiple questions from Barbara and Anton that are now, but very good questions.
Thank you very much, Martin, Barbara, and Anton. So let me try to react to some of the points you made. I mean, first from Barbara's discussion, I took the question of how to make these effects last, or the positive effects from digitalization. And, you know, we see that, so we don't see, as I mentioned, kind of so far a structural change in the composition of labor demand. Also, I wanted to mention some other piece of analysis by colleagues, Antonio Spilimbergo and Prashi Mishra in the department, who have looked at the share of online sales using, you know, credit card data. And they also find that after the pandemic, the share of online sales went back to pre-COVID trend. So I'm not sure, you know, if that's something you also observed, Barbara, in the data of your company. But it seems, you know, that what happened during the pandemic, basically digitalization helped with resilience, you know, to the pandemic, protecting both workers and their productivity. But it's still unclear, you know, how, you know, this will have kind of long-term effects, and whether this, you know, added digitalization per se, actually, you know, is how the you know, or these businesses want to keep operating in the future. If you think about restaurants, you know, hospitality, etc., the digital technologies were helpful, you know, to operate in times of crisis. But maybe now that the crisis is over, they want to return to, you know, kind of a mode of functioning that was closer to what they had. Because as I discussed, you know, we see most of the gain in digitalization in these entities that were less digitalized initially. But we still believe that, you know, digitalization has very positive effects as long as governments put in place the accompanying policies to make sure that the gains from digitalization are broadly shared. And this goes to the, you know, infrastructure, making sure that everyone is connected and has good access to digital technologies. And there, you know, Barbara had an interesting question that there could be a trade-off between having kind of, you know, the most advanced infrastructure with very fast, you know, access, etc., versus, you know, connecting everyone or as many people as possible. And that could be an important trade-off in some emerging and market developing economies where, you know, they would have to take these considerations into account. It also, beyond infrastructure, I think the digital skills part is very important and will become even more important with the new types of technologies that Anton discussed, this generative AI. And I will say a few, you know, more words about this afterwards. If we don't want workers to be replaced and we want them to keep, you know, having meaningful and productive jobs, they need to learn to use these new technologies. I mean, the world economy has, you know, evolved so drastically in terms of technologies over the last few centuries, but even the last, you know, few decades. And, you know, many times around, we've been worried about, you know, labor being replaced. But I think in terms of labor force participation, unemployment rate, we're still pretty much, you know, where we were before, if not better, say, on labor force participation. So, you know, I think the consequence of technology has been that we've become more productive. We do many more things, and there, you know, what we do is also, you know, cheaper. So there is more demand for what's being produced, and so, you know, then the demand creates more demand for labor. So I'm not sure that, you know, ultimately labor will be replaced by technology, just because maybe humans find meaning in their jobs, so they want to keep working, and they find ways to work with the technology to produce more interesting things. So I see that, you know, I switched to Anton's kind of Anton's discussion here. I agree with you that this generative AI will something new about it is that it creates the possibility to automate more cognitive skills. And one interesting point there is whether the political economy around these technologies will be different or not than when the automation was for middle or lower skilled workers, because presumably higher skilled workers may have more, political influence. So I think it will be an interesting evolution to watch. But I'm an optimist that this will not replace, I think, labor or make us idle, but instead will make us much more productive and do more interesting things. I just want to say one last thing on the invisible hand. I mean, that's a very good question, and that's a question we asked ourselves. Why didn't we adopt these technologies before the crisis if they were so good for us? And as you know, I mean, there are many. First, there's hysteresis, right? There is a way we do things. We like to keep doing it the way we do it. There could also be network effects, externalities, that the crisis forced us to overcome this, and also government to put in place, supportive policies that helped make the switch. So that's another reason. In terms of working from home, there is the stigma. There was clearly a stigma before of, people were concerned that if they worked from home, they would be less eligible for promotion. They would miss kind of the social capital. And also maybe firms were not fully set up to operate on a large scale with workers working from home. And they were forced to make those big investments, these fixed costs, during the pandemic. That there was no pressing reason to do those big fixed costs before the pandemic. But I would say for me the most interesting finding is that of all the changes we looked at, the one that seems to be sticking the most and maybe where there is the greatest, I think, gains in welfare is this working from home. I know it's not for everyone. There can be concerns about mental health issues or isolation for some workers, but I think overall workers, vote with their feet and say that, we prefer to work from home at least part of the week if we can. So to me, the fact that this is what seems to be sticking is maybe where there was the greatest, welfare gains to be reaped that were not being reaped before the crisis. Thanks a lot.
Great. So we'll get to a few audience questions here. One of them, there are two to Barbara actually, where there's a discussion about CBDCs and their impact on interoperability, and another one from Gary about if blockchain is a long-term challenge to the Visa business model. Although there are only 2 minutes remaining, so maybe just a very quick thing on that. And then one question to Florence and probably to Anton as well, also from Gary. Where do you expect a Luddite reaction to emerge among cognitive workers? Florence, I think you maybe have already answered that in a sense, saying that you hope that you don't expect that there will be this negative reaction. There will be actually an adaptation. But one question to you is from Pierre Raffi, which is, it's intriguing that in the 3 Baltic states, particularly Estonia, which has a track record of being, doing a lot of digitization of public services, there is a low level of working from home compared to other countries. What are the factors that you think explains that? Because, and on the opposite end of that, Sweden has had one of the most impressive increases. So I guess maybe one minute to you first, and then a minute to Barbara to answer these huge questions about blockchain. Sorry, but such good content on the presentations.
Yes, just to say on Latvia, I would have to look at the specifics. I know, for example, in Sweden that they are well advanced on work-life balance. And, so this, the opportunity to work from home from the crisis probably prompted large increases. Yes, I don't want to use more of the time and hand it over to Barbara and Anton on the other questions.
Well, I would just like to say that I'm still kind of stunned by the fact that Anton seems to be positioning work from home, which Florence, you see as the most sticky effect of the crisis, as a springboard to automation of our jobs. So I would like to point out that I'm coming from our beautiful offices in Penn Quarter here, so not working from home today, although I suspect that won't save me. But on the questions, Martin, gosh, the CBDC question seems like just a ripe idea for a future seminar. Pierre, I would just like to say we do have a paper on this, so I'll drop that in the chat and would love to have further discussion. Gary, on blockchain, gosh, another several hours can be spent on this. Visa has used blockchain in our B2B Connect solution. It's definitely a technology of interest. It has been evolving, has been quite a bit in the news recently. And so I'd say lots of questions for future discussions.
Great. Thank you so much, both of you, for the quick responses, keeping us within time. Thank you, all our audience, for joining. Thank you, Florence, for the excellent presentation of a fascinating paper, and to Barbara and Anton for really helpful discussions, which added a lot of value on top of it and posed useful questions for Florence to respond to. So with that, I will adjourn this wonderful session.
Thank you.
Thank you.
Thank you so much.